Hey everybody, welcome to my new weekly review. So last week I took three trades USDJPY here. This was a yes, NZDCAD, yes, EURNZD, where this was one break even and two losses. So I will go over it. I will open a daily chart, weekly chart, and 4-hour chart. So what can you see on the daily? I'll take my drawing tools. On the daily, we had the first time break. So this was your last high. This was your new low. These were the same lows, new low. So we had a first time break. We broke this last lower high here. And we tapped this next selling zone, which had a clear support, resistance potentially here. So when we trade first time breaks, or if I trade the first time break, I want to see a clear selling zone aligning also here with the monthly selling zone here, this horizontal line, tapping the monthly sellers, and we could go to the downside to potentially tap this support as a break and retest. So we have a break, and yeah, we can potentially have that retest, which likes the institutes and the banks like to do that. So yeah, so then the weekly chart. What can we see on the weekly? We had a 3 out of 4 to go short actually. Here was a trend still bullish actually because yeah, if a week ago or 2 weeks ago I was seeing this as still our bearish trend because we had a first time break, so we can see this as a confirmed trend switch, but that's not the case because this was still your high, low, this is a first time break, so this can be actually again bullish, so it's just an indication. So the trend was actually against us. The thing that was for is the fib from this high to this low here, the fib, and the supply and demand zone was here potentially for us with this monthly selling zone, which I counted as a supply and demand zone for us. That is the only thing. So yeah, 2 out of 4 actually. So then if I go to the 4 hour, what could you see on the 4 hour? We had here a nice shoulder one head. We tapped the lows for our lows of this previous higher low. So, and then we tapped this shoulder two region, which was clearly valid for me because we tapped the low, so we could have some potential upside momentum to that shoulder one. And of course, we could go more to the upside to grab here liquidity of the highs. That's why I put my stop loss on this high. I could also put my stop loss above this high weeks because we don't close on that 4 hour low. We had just a rejection of that. So there is a more likely chance that the price can go and tap these highs or go a little bit higher here to just not tap us out if we had here a stop loss above that weeks for going to the downside. So this trade was just a break even trade for me. We tapped the 4 hour minus 27, so I go break even, and then we tapped here the break even point, and then we were out the trade. So this was just a break even trade, valid for me. So this was a good trade. Then Euro CHF, this one is a trade I missed. I saw this as a way too big pattern, and if I saw on a weekly, it's also a weekly lag. So if I go over the daily and the weekly, so I will open the charts here. I think you don't want to open. Um, if I copy it and I put it in here like this, then it would normally open. Yeah, I don't know why it's not opening, but okay, yeah. I will go over just the daily. The weekly was just a weekly bearish W. So this was a weekly bearish W actually. And on the daily, this was for me a very big pattern on the daily. At here, your first leg, second leg, third leg, fourth leg. This was already a weekly pattern. And also the shoulder one was here sitting head, shoulder two. We tapped it nicely and went to the downside. So I saw this as a big pattern, so I want to stay off it. But actually, after reviewing it, we had already a candle close doji here telling us that the bears could kick in, and also a pattern within a pattern on the 4 hour. As you can see, I will show it. You can see we had here your shoulder one. This were the same highs had. Then your first leg, second leg, third leg, a break of this previous higher low here. We broke that, so we have a pattern within a pattern. We tapped it on the shoulder one. We had the head here, shoulder two. Within that, a bearish W. So you have a pattern within a pattern, which is increasing our probability for a succeeding trade. Also, we had here our weekly supply and demand zone line, this blue line here, and we were trading below it, so this could hold the price up to the downside, which it did for two times, and then we went to the downside aggressively till that daily I see here where the price likes to come back to. As you can see on the daily here, this one, this I see here, this small I see here, we tapped it, and yeah, the buyers can kick in now because this is clear impulse potential correction also. So there was some room to take this trade still at IC, so we did that. And yeah, I missed this trade because I found it a really big pattern, which I could take because it's a pattern within a pattern. Then NZDCAD, this I took with a 0.5% loss, 0.50% loss because I'm already minus 9% on my verification on my 200K. So what my conversation was on this trade on NZDCAD, I was here in really heavy doubt because I wasn't 100% sure that my stop loss was the best one because I saw when I go over daily, weekly, and 4 hour. I will explain it more. On the 4 hour, there was not a clear break. So I will go over it. So what I saw on the daily chart was that we had a first time break. You cannot see it clearly on this chart. I needed to put my screenshot a little bit bigger, but it was a first time break impulse. We had here our higher low. This was our higher low region, so we didn't had clear resistance yet. Then we touched that buying zone, so we can expect to pull back to this zone for a retest. We did that, but this trade took me out. And why is that? So I will go over the 4 hour and I will explain it. On the 4 hour, you can see at your potential shoulder one, head, shoulder two, and we tapped the 4 hour highs. We just tapped it. We not close on it or above it. We just tapped it. So there is a high chance, like I explained before, that the price likes to come back to that lows, to come back to that beginning of correction or that lows to grab liquidity, and we grab liquidity with a new action on this low wick. So this is why it's important to set your stop loss below this 4 hour low wicks because the price likes to come back to that lows potentially or at shoulder one or to grab new liquidity if that isn't enough, because here it wasn't enough. We had a small push, it wasn't enough. Then we could go till this lows, it wasn't enough. So what is the next thing that is enough for us is this new action here sitting this 4 hour low wick sitting here, and we grab that liquidity from there, which took a lot of yeah, buyers out with their stop losses like me. And yeah, I just needed to had that stop loss below this lowest 5 pips or something like that. But this was a conversation I had when I would take here some parcels out or go break even, that I have my IR would be not anymore that good. But if I must say, if we go to that daily shoulder one here, this was aligning, I guess, something here, then this trade had a good RR. So actually, yeah, I could take this stop loss here below this week. So this is just feedback from myself. I just also said it here, that. And then the next one, Euro NZD, was here. I took this one. So this was actually when we were discussing this on a team call with my mentor. I saw this as a small pattern, and we were talking about the small patterns that you can take trades on the small patterns if you have a 4 hour bearish or bullish momentum aligning with the daily trend. So if I go over it um, on the daily chart, I do this away. So if you look on the daily chart, this is a really small pattern. This is your first leg, second leg, third leg, fourth leg. The the pattern comes back in only, so you have your second leg, one, then the third leg, 1, 2, 3. In 4 days, the trend comes really fast back from your second leg, third leg, fourth leg. It only depended 4 days. So for me, it's a small pattern. You can see it. And then we could take your trade on this daily IC here or lows. And then I went till the 4 hour. So then I went till the 4 hour, and then I want to see, okay, what we have there. And we had a flip completion, a minus 60, 80 flip completion at this daily IC. And the 4 hour trend was still bullish. And you can see this as your high, low, higher high. So you have your bullish M here sitting. So this could potentially uh yeah, push the price back up after this minus 680 flip completion aligning and potentially making here at shoulder one, head, shoulder two, which it didn't do that. Because actually, yeah, the daily candle close was really bearish. This daily candle close came only in 1 day back. And this first leg, saying third leg, so this third leg here came back or went impulsively to the upside in 2 days, and this in only 1 day. So actually, it was way too aggressive, which I didn't backtest. I just yeah, take it over, I would say. So yeah, okay, it's small pillar. If we have a 4 hour zone, we can take the trade, but I didn't backtest it enough. And that's why it's feedback, because yeah, there were not any clear rules on it. For a moment, I did for myself, so actually it was a clear feedback for me. Um, so yes, and on the 4 hour, yeah, we just couldn't go on break even actually. So this was, yeah, shame that we didn't do that or couldn't do that because it wasn't going on break even or running break even, so not on 1%. So yeah, that's why it went a loss. And then we took here some, yeah, resistance zone here on the 1 hour or 2 hour, and then we went to the downside. I took a loss. So yeah. So then if I go over the weekly, I think this was the weekly, yes. The weekly here, was it a 2 out of 3 out of 4? Yes, it was 3 out of 4. So the weekly here was going to the upside. We had here our low, our high. Trend was bullish. We had here our major bullish M here. Impulse correction here. Um, what you can also see here is your candle close was with you. This was a really impulsive candle close. The only thing we need to be careful for is that we had here a clear resistance zone, support, support. This was a waveform, and this was your clear break of it, and this could be your retest for potential more downside momentum, which I took in mind. But yeah, the daily convinced me small pattern, we can take a limit for hour, but yeah, it was wrong to do that. It was wrong to do that. So yeah, you had your trend with you, candle close with you, fib from this low till this high was with you, and the supply demand zone, this one was against you for potentially making the shoulder one here, head shoulder two, potentially upcoming week, and then grab that liquidity for more upside momentum that is potentially happening for this upcoming week. So this is the trade I took then. Then EURNZD I took also. This was a trade I went over. Sorry, this was a trade I went over. And then CHF was a trade I missed. If I go over the daily, then the weekly, and then the 4 hour. So I will go over the daily first. So this trade I missed because I had a conversation about this trade that the price was really moving correctively, and we grabbed the liquidity two times, and we didn't manage to tap these daily highs. And I was talking to myself, why are we not grabbing enough liquidity for going back to these daily highs? Why didn't we do that? And this was talking me out of the trade because I saw this really as a, yeah, this was our bullish M. Then here, the bullish M was in play. We tapped the fib from this bullish M here, and then we had here our same high, so we expect the same lows, which we did. We grabbed liquidity from this uh, low wick here. That's a new action. We grabbed liquidity, and then we didn't manage to go to the daily highs. So this was questioning me from, okay, yeah, why is that? So then on the 4 hour, then I saw this. We had here our descending channel here. We grabbed that liquidity here, you can see it. We grabbed liquidity until the upside, back to the downside, and then we had that massive impulsive move, closing a little bit above these highs. And then you can take your shoulder one here, ahead, shoulder two, and I took this trade on demo. And this was because normally I would take this kind of trades, but I had -9%. I had some conversations. I wanted to lose not so many more trades anymore. We had to clear also descending channel. We broke out of it. So the logical move is to tell the beginning of correction. But the conversations in the head talked me out of it. And yeah, you can see also this as a pattern within a pattern. So shoulder one, head, shoulder two. Within that, a bullish M sitting here. So actually, we must take this trade. But yeah, after then, the daily that was so corrective and not tapping the daily highs was telling me, yeah, there is something off. But actually, the price can take uh, as long as it wants. It can take as long as it wants to tap these daily highs. Because as you can see here, the price was telling us something, a story. On the 4 hour, we had still this bullish M keeping the price to the upside. So these lows were still holding the price to the upside. As you can see, it was really holding well for a lot of times. It grabbed that liquidity from this 4 hour low, as you can see. And still, I didn't manage to take this trade because the conversations about the losing week and the daily that wasn't tapping the daily highs was convincing me, okay, I want to stay off it. I want to don't want to lose any more trade. Um, I will take it on demo, and I took it on demo and it played out. So yeah, this is really frustrating to see actually. But yeah, uh, that's just feedback actually. So yeah, this was my trading week, -1%. I had a couple of weeks, not that good trading week. Actually, if I'm being honest, I took just all the trades that yeah, the trades that were allowed to take also, but these were losses. I took all the trades that were allowed to take that were losses and also trading errors. So simply, there were a few trading errors and a few good trades, and these good trades were also losses. So then I didn't took the good ones, and yeah, that's really bad actually. But yeah, it will be okay. Just keeping doing the work, and yeah, then we will keep. Then the results will come, and yeah, the payouts will come then. So the only thing that is key is being consistent, successful, disciplined, and you cannot outwork someone who is talented. You can always outwork someone who has done the more work. So if you just put the work in more than someone else, then at the end of the journey or at the end of the finish line, you will take the winner or you will see the results of it. And that's what is now in my mind, that we just need to keep going. For every trader who is listening at this, keep on going, don't stop when the conversations are becoming too loud. Um, that's the only thing I can give with you. So I hope you liked it and see you next week. Bye.